CGTN, China Global Television Network.
Zimbabwe is grappling with the worst economic crisis in a decade. The road to economic recovery appears to be long and bumpy as yet another cash crunch hits the southern African country. Faced with mounting debt and foreign currency shortages, Zimbabweans fear the return of scenes from 10 years ago. And even as the government moves to seize control of the situation, the economy remains uncertain in what has emerged as President Emmerson Mnangagwa's biggest challenge since his inauguration in August. So how severe is Zimbabwe's economic crisis? And what solutions are in the offing as the country seeks a stable future? I'm Beatrice Marshall. Welcome to Talk Africa. Now, recent weeks in Zimbabwe have seen incidents last witnessed in the country in 2008. The introduction of new taxation measures and the lowered value of the country's bond notes triggered panic, soaring prices of basic commodities and acute fuel shortages. In some instances, stores have been forced to shut down as shelves run empty. But even as confusion prevails in the midst of growing uncertainty, the government is now reassuring citizens and the world that the situation is under control. CGTN correspondent Farai Mwakutuya filed this report from Harare.
First, the Zimbabwe Congress of Trade Unions called a strike against a new 2% tax. Then anti-government group Tajamuka wanted to shut down the country over the worsening economy. Both failed, and not just because of the heavy security presence mounted to quell any demonstrations, but because mindsets have changed after the elections, according to an outspoken government critic.
As a nation, we want to get on with things. You know, we want to work. We want to see how far this new cabinet can take Zimbabwe. We want to see how we can engage in this new dispensation.
Kudamsa Siwa doesn't expect overnight results, but he's seen enough to be optimistic.
If we see situations, for example, the 2% tax, where there is issues of it wasn't thought out properly, I think when we engaged with the minister, I think there was actually some reprieve. You know, so he actually backpedaled a little bit to try and think it out a bit better. And so I think as they learn to listen more and as we learn to engage more, I think we can come up with better solutions together rather than this us against them.
The protest had been called amidst shortages of basic commodities and the closure of some businesses due to a crippling foreign currency crunch. The government blames fake news for spreading panic and causing artificial shortages and insists the situation is under control.
We have had Confederation of Zimbabwe Industries talking directly. We have had Grain Millers Association, again, talking directly to the people. We have had sugar refineries and oil pressing companies talking directly to the public to say there is no shortage to inputs, there is no shortage to the oil itself. There is no challenge in terms of the production of all these essential services.
There's been an improvement in fuel deliveries and the black market rate for US dollars has tumbled. The government has promised to arrest bankers and any high-profile officials behind the illegal trading, a move it hopes will mark a return to stability. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Well, let's broaden this discussion a little bit and understand the unfolding economic situation in Zimbabwe. I'm now joined by my expert panel of guests to help us assess the unfolding economic situation there. In London, Chris Vandome, he's a research analyst and Southern African affairs expert with the Africa program at Chatham House. And with me in studio is Rishon Chimboza. He's the head over East Africa at the Africa practice. Gentlemen, thank you very much for your time, and let's get into this discussion. Chris Vandome, I'll start off with you because I want to get your assessment, both you and Rishon. The situation as we see it, Zimbabwe seems to have sunk into economic meltdown, described as the country's worst economic crisis in decades. We are seeing it has a liquidity and foreign currency shortage there. We are seeing basic commodities unavailable on the shelves. Give us a sense of your understanding of what's going on in Zimbabwe.
Okay. I think what's going on is that there has been a prolonged liquidity crisis in the country. For a very long time now, people have felt that strain of the multi-currency system that they have and post-dollarization. From about 2 years ago, this currency, or the adherence to the dollar, was uncompetitive for Zimbabwean industries to export to the region. That started to put a bit of strain on the economy. The government's solution to this was the bond notes, which were marketed as an export incentive. But over time, there has been a gradual increase in the internal exchange rate between what you would pay for if you're paying in US dollars, as opposed to what you would pay for goods or services if you're paying in bond notes or in electronic money in the RTGS accounts. And what's happened recently is that this system has got widened to such an extent that even the finance minister, Minister Mthuli Ncube, when he was in London last week, was acknowledging that there is this disparity internally inside the country. So what ordinary Zimbabweans are feeling on the streets is that effect. Underlying all of this is a government running a very large government deficit.
Right.
And it is financing that deficit, or has financed that deficit, by selling government debt into the banking system, which is what has created this expansion of electronic money versus the paper hard cash US dollars that are available in the country.
Rishon, let me get your thoughts here, because you quite regularly return to Zimbabwe and have been monitoring the situation there. What is your understanding of what's going on? What did you see when you returned to Zimbabwe?
I'm in complete agreement with the chronology of events from Chris in terms of how Zimbabwe got to where it is and the disparity between the exchange rates. I would also like to add that it's a multi-layered narrative, because on one hand, you've got this government that came in with a lot of gusto, with a lot of ambition, a lot of expectation as well in terms of what they were expected to deliver for the people. And when the announcement was made the last 2 weeks regarding what the minister called chasing out bad money and separating the local currency accounts and FCAs, there were flashbacks, right, of 2008 and Zimbabwe's hyperinflationary era. So a lot of those memories were triggered again, and that what would be considered rational economic behavior in terms of preserving wealth has kicked off again. But at the same time, there's also the international narrative with Zimbabwe. That's one thing that helps to keep things in perspective. So the hardships and the struggles and the challenge and the flashbacks that the people in Zimbabwe are facing, to some extent, they can be offset by the amount of goodwill that the country still has internationally.
So you've mentioned, though, that there was a lot of gusto when the government, the administration of President Mnangagwa came in, though. And today, though, President Mnangagwa has said that the situation is under control, and he has assured the nation that there is no swift remedy, but that it is under control. Is it under control now, though?
Well, you know what? I think as much as it's important to have a technically competent finance minister, it's also important to realize how crucial communication is at a time like this. So you asked about my experience last time when I was in the country. What really stuck out was the confusion of what we have in our bank accounts. What is it actually worth? So communication is something that is very important, and it's good to see that the government is increasingly talking about that more and more. In terms of whether they have the situation under control,
right,
they're stuck in an invidious position. Damned if they do, damned if they don't. The ultimate thing for them is to try and bring some sort of interim stability to the financial system. And you've got the minister who has introduced what he calls a transitional stability plan, a TSP. And that's one indicator that they're serious about reining the situation. But locally on the ground, that is certainly not the feeling. It's shades of 2008 all over again.
Chris Vandome, your thoughts on those policy decisions that the government has taken, including some austerity measures and that stabilization program that Rishon is talking about, though. Do these policies, do they resonate with everybody? Are all stakeholders on board with this? What's your thought?
Yeah, I agree, and I think that there's that idea of damned if you do, damned if you don't is very true. the recommendations that have been made from the IMF and others for stabilization in Zimbabwe all revolve around long-term policy measures. It's things like austerity, SOE reform, tackling the very large wage bill that the government faces in order to be able to, in the long term, stabilize the fiscal position. But of course, these are mid to long term measures that don't necessarily have an immediate impact on those people in Zimbabwe who are going out and stockpiling food now. So there's a real kind of issue there. And the other thing is that the trust, and it's that trust between the people and the government. And there's two issues to this. The one is to what extent does the government really have an impact over the economy, where 80% of the economy is informal, then the policy levers that the government has at its disposal are limited. And one of the big things that is important for people is this cash crisis, and right. the belief that people have in the security of their currency is a sign of trust in government. And I just add that the other element of that is the international position. The elections held this year were very much an internationalized election, both sides seeking to gain the support or trust of international audiences. And the government put a lot of emphasis on this election being the sign-off on legitimization of a government that could then attract international investment. And the way in which it played out didn't lead to that instant kind of legitimization, which means that at the moment, investors, international investors, I think that there's still a little bit of uncertainty as to how to engage. I would expect that to change in the new year when we've moved past this post-electoral period, but certainly in the short term, that's still a factor.
There's a fundamental point that you've mentioned there about the extent to which the government is actually in control of the economy. Is the government in control of the economy?
To a large extent, yes. Because if you look at on the opposite side of it is the pronouncement to separate these two accounts to some extent could be seen as one of the trigger factors into the economic behavior that we're seeing in the country. So they do have some sort of control on the economy. I mean, Chris mentioned the difference between the short-term and the long-term interventions. In terms of short-term interventions, what we're seeing right now is a government that is seriously desperate for liquidity. We can see this from the facility they've got from Afrexim, another one from CDC that's gone through Standard Chartered, another one as well that has gone through GemCorp. So they do have the capability to be able to stabilize foreign currency reserves and also bring in more foreign currency into the economy. And one way to do this within the short term is to look at the tax regime, the tax system. Granted, the majority of the population is employed within the informal sector, but for those who are already paying taxes, how could we make sure that we're growing the cake as opposed to cutting it into smaller slices? So for example, this 2% tax on mobile phone transfers, we have to look at who's the one who's going to be most affected by this. But at the same time, where do they get the revenue from? So to answer your question very briefly, I would say yes, they do have a lot of control, but their mechanisms are very limited. It's better medicine.
And for those people who are watching this, though, and looking back at 2008 that you mentioned, are we going to see a repeat of the 2008 financial crisis?
The fundamentals between 2008 and now are completely different. Firstly, we have to look at the composition of the government, right, which is a clear indicator that you wanted a break of the past. We've seen the size of the cabinet has shrunk. We can see the clarity in which policy positions are being articulated. That's very different. We could look at the international goodwill. At that time, Zimbabwe was a co-member of the Axis of Evil Club, and they've left that. So the fundamentals are completely different to what they were in 2008. So I think without being overtly optimistic, there is chance for a new dawn for Zimbabwe.
Right, gentlemen, we'll be right back because we're going to take a short break now. The conversation on Zimbabwe and its economic turbulence continues right after the break. Stay tuned.
China Global Television Network. From broadcast centers in Beijing, Washington and Nairobi. A unique global perspective. 6 channels and a video content service. News when you want it and where you want it. On TV screens, websites, mobile platforms and social media. CGTN. See the difference.
Welcome back to Talk Africa. We are looking at the unfolding economic situation in Zimbabwe, and our expert panel of guests still on standby to break down the dynamics of this subject for us. Chris Vandome, let's interrogate the options that President Mnangagwa has moving forward now in pulling the country out of its economic abyss here. What do you see working in the short term? What do you see working in the long term? We have already talked about the stabilization program. What do you see working?
Well, the long-term priority will be to get the budget balancing, and that will involve making very difficult decisions around how to reduce the government wage bill. Other long-term priorities will be state-owned enterprise reform. This is something that's been talked about for a very long time. And the other long-term priority will be re-engagement with the international community and the international financial institutions. A part of that will be to reignite the Lima process and continue the work that had already been going on, albeit quite slowly, around debt clearance with the IFIs and progress there. As we've already discussed, the priority in the short term is around liquidity, putting money in people's pockets. And I think one of the kind of key questions that we see going forward is around this new cabinet makeup, and where is it that the public will see trust, and where is it that the international investors will see trust. There are some very good technocratic appointments into economic positions within this new cabinet. But it's going to then be a case of to what extent are these appointments going to be able to exercise their own initiative and put in place their own programs going forward, right. And are they going to be able to navigate party politics in an effective way to get the support across government to be able to enact some of these reforms?
Right, Rishon, your thoughts, and of course the whole point again comes back to, are these government initiatives getting the support from both business and the opposition? Yeah,
I think initially when the government, or rather when the president won the election and he appointed his cabinet, there was an incredible amount of support. As Chris had mentioned, there were a number of technocrats there who'd come from the business sector, and there was confidence that there's one of our own who's there. But the reality is we shouldn't undermine the layers and layers and layers of policy that was sometimes contradictory that had been implemented over the past 30 plus years. So to get the economy to where it is, that has to be unraveled and reconstructed. So in terms of how Zimbabweans are looking at the situation and how much faith they have that this government will deliver, a big part of this is going to be down to trust. This is domestically as well as internationally. How do we know that we're going to be able to repatriate our dividends? How do we know that property rights are going to be respected? How do we know that at the drop of a dime policy is not going to be changed? What the government has to its benefit, which it should play to, these are all very valid questions. But as a short-term measure to build that trust, which is very hard to quantify, right? One of the things they could do is they could look at that TSP, right? The Transitional Stabilization Plan. The great thing about it, when you read through it, you can see that a very astute technocrat has put it together. Very quantitative, evidence-based. What that does is create a framework for monitoring and evaluation. Right. So for example, you look at Kenya with the Vision 2030, which Zimbabwe also has, by the way, but hasn't been spoken about much. The Vision 2030 even has a website where you can go and you can track how are we performing against each of these milestones. So what they could start doing is start putting in place very strong communications campaigns to say, look, this is what we want to do as a country, and this is how we're performing against our milestones. That could play a role towards gaining that trust.
But that trust and foreign investor trust as well was there for President Mnangagwa in 2017 when he took over. And the country at that time attracted an estimated, I think, $16 billion in investments and new business. Is that trust still there, though, or are investors adopting a sort of wait-and-see mechanism here to see how the rest of the year pans out, or how the economic crisis stabilizes?
Yeah, so when we look at investment, best way is to look at like cholesterol, right? Good cholesterol, bad cholesterol. Not all investment is created equally. So what we're looking at now is not the hot money that could come into the country, take advantage of arbitrage opportunities, be able to mop up dollars, because Zimbabwe is a dollarized economy, and then push it out. What we're looking at is the long-term capital investment. We're looking at mining investment, infrastructure investment. This is going to take some time in order for it to come out. The engagement with the international governments and the IFI is going to be very important, because they can provide those sorts of guarantees for investment at that level. So yes, they're waiting at the fringes and they're ready to come in, but this engagement with their governments is critical for those guarantees.
Chris, I do hear here that it's going to take some time before the economic turbulence stabilizes here. The political climate is already quite stable in Zimbabwe. Why is it such an uphill task, in your view, though? Why is it such an uphill task to get the economic turnaround that many people were expecting?
In the previous administration, there was a leader there who acted in a way that demonstrated that he was prioritizing his own political position over the economy, and so would make policy decisions irrespective of what economic effect that they would have. Now, in President Mnangagwa, there is a president whose political legitimacy is built around him selling himself as the guy who can turn around the Zimbabwean economy. He has struggle liberation credentials, and so in building his political legitimacy around trying to turn around the economy, he is bringing people on board, and this has been seen kind of prior to the election already. You're seeing a way in which Mnangagwa's using the international community as an echo chamber in a way that wasn't happening before. So there was real attention being paid by the government to how is it that what we're doing is being received both internationally and domestically, and how is it that kind of the signals that we're giving are having an impact. So that's already a positive sign in showing that there is interest in seeing how it is that this stuff is reacted to.
Right. Rishon, do you agree though? And is it rather unrealistic for Zimbabweans to expect quick results?
If we were to look at the short term, right, and by short term here I'm talking about the next 6 months or so. If we were to look at the ordinary Zimbabwean who would put their money into a bank account as US dollars in 2012, these US dollars were then converted to bond currency. A few months later, there's withdrawal limits on that bank account. Then a few months later, the value of those bond notes on the open market against the US dollar depreciates. This could be someone's pensions, this could be someone's savings. So we have to empathize with that reality, and it's something that cannot be taken lightly. But at the same time, the measures that are being taken now, it's medicine for the policies that have been made for the past few decades, and trying to unravel those. So there's no easy path to getting that recovery. In terms of, if we were to say what could he do more of, I think communication is absolutely critical. Absolutely critical. What is the TSP seeking to achieve? The money that you have in your bank account, what's going to happen to it? In terms of calming the financial markets within Zimbabwe, because right now a lot of liquidity is going into the stock market. Right. What does this mean for them? So communication, communication, communication. Cannot emphasize that enough.
Rishon, so you were talking about there is no easy path for for Zimbabweans, though. So how do you foresee this crisis unraveling, let's say, in the coming weeks, in the coming months, in the coming years?
I would say within the coming months, banks have been given a deadline in which to separate those two accounts. Eventually the market is going to determine what the exchange rate is between the bond and the US dollar. That's already happening, and it's going to become accepted fact. Once that becomes accepted fact and the two currencies are existing side by side, then people will adjust and they will move on, painful as it is, including that erosion of earnings, etc. But that's what's going to happen. Those two currencies will start existing side by side. Once there's more confidence in that, then businesses can start trading back as normal, because they will know that when they sell their goods, they know at what rate they can change local currency into foreign currency and go back and buy inputs and replenish their stock as well. So that's how I foresee things playing out over the next few months.
All right, Chris, just a final comment from you, though. Do you think there's reason to still be optimistic about Zimbabwe's future?
I think that the litmus test on this is going to be what happens next week. There's a parliamentary outreach process or engagement process around the forthcoming budget for the 2019 budget. And the way in which that is conducted is going to be able to tell us to what extent this is a government that is listening to people on the ground and is understanding what their economic priorities are and is coming up with a way of putting that into action. In terms of what's happened for economic collapse in Zimbabwe, the economy collapsed a long time ago, and what we've seen is unable to kickstart and get off and to get the growth that everyone's been so expecting for such a long time.
Rishon, I know you have a final comment on Chris's points there, but I do also want you to mention, as you wind up, is there still reason to be optimistic about Zimbabwe's future?
Okay, so first thing, just to add on to what Chris has said, what's going to be very important for the government right now in terms of part of this litmus test is how effectively they can multitask, because the international dimension is still very important. So they still have to look at taking advantage of the interest in Zimbabwe's commodities. There's initiatives like the Belt Road Initiative that are trending right now. Zimbabwe has to see how it can get involved in that. The last time there was quite a lot of focus on the domestic and ignoring the international. So those two elements have to be balanced. Yes, there's a crisis at home, but let's not also lose fact of what's going on outside the country, because we can lose our competitive edge. Then looking at whether there's reason to be optimistic, I have to be biased and I'll say absolutely there is reason to be optimistic. I think, like I had said earlier on, the fundamentals right now are very, very different. I mean, I'll give you an example because I'd like to illustrate this with tangible changes. You look at the state-owned mining company, ZMDC. For the longest time, ZMDC had loss-making assets, some of them under care and maintenance, but they've already appointed a board which is a technocrat. They have a minister who's a technocrat, and they've started privatizing some of those mines that are owned by the ZMDC. So that shows initiative in the right direction, that the government is serious to get things right. So there's more right than wrong right now.
Right, Rishon, we're ending on an optimistic note here from you. We'll leave it there for the moment. Gentlemen, thank you very much for joining us on Talk Africa. That's all we have time for this week on the program. Thank you to our guests for their insights. In London, Chris Vandome, a research associate and Southern African affairs expert with the Africa program at Chatham House. And with me in studio, I've had Rishon Chimboza. He's the head of East Africa at the Africa practice. Now, remember, the conversation goes online through our Facebook and Twitter handles, and you can also catch the episode on the CGTN Africa website and our YouTube playlist. To tune in again next week for more Talk Africa. From me, Beatrice Marshall, and the team in Nairobi, goodbye.